Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Matthew Merle, managing partner of blockchain Coinvestors, to discuss institutional investors and their concerns with allocating to Bitcoin. Matthew, it's great to have you with us. Welcome to Trade Talks.
Thanks for having me, Jill.
And Matthew, you just polled a universe of accredited and institutional investors to understand their reservations in allocating to Bitcoin. What do you think was the most surprising result?
Yes, so for me, the most surprising result of this survey, we have about 10,000 accredited investors that we interact with at Blockchain Co-Investors. The most surprising thing was that there were just so many concerns that made it onto the list. You know, in many spaces, there'll be one, two, or three things people are concerned about. Here, there was more like 12 or so different topics that were of concern.
And given that, how much education is still needed and how far away are we from mass adoption to get there?
That's exactly the point, Jill. So you just cut to the chase. Most people around the world still don't understand what Bitcoin is, and they need a lot of help in order to take the first step. And other surveys we've done, for example, at Bitwise, where as and advisors, we see that more than 90% of family offices and high net worth individuals haven't taken the first step yet. So we got a lot of work ahead of us.
And I thought this was interesting. The second biggest concern revealed is that investors think they may have missed the boat with Bitcoin price hovering in the $50,000 range. What is your response to that? I mean, you can make the same
Yes.
argument when you look at stocks and be concerned about the value.
So it's an interesting one. The better the performance in the last period, the more people want to be in something until it gets to a certain point, and then they don't believe it can happen again. And we saw that with Amazon. Amazon was compounding at such a high increase year after year that most people talked themselves out of investing, even though it carried on compounding. The same has been true of Apple. Well, in the case of Bitcoin, the annualized returns every year for the last 12 years have been so high that a lot of people are saying it just can't carry on going. What's different about Bitcoin, of course, is the scarcity on the one hand, and on the other hand, the utility it provides to 8 billion people. So we have potentially massive demand and almost no supply.
And as a leading VC investor in the blockchain space, where are you seeing the most exciting opportunities to allocate your capital at the moment? And how will that change if CBDCs gather more momentum than cryptocurrencies do?
It's a great question. And I just want to correct one thing. We are a fund of funds. So we give our money to the best blockchain VC funds.
Got it.
And we think we are great partners for them, and they do a great work and job. It's through other funds that we're investors in 300 blockchain companies and projects. So I just wanted to clarify that. But in terms of answering your question, the amazing thing is that it's roughly the same infrastructure to support sovereign digital monies and assets as it is to support distributed sovereignless versions of the same. So it doesn't matter whether it's the digital yuan or the digital dollar, or on the other hand, Bitcoin, Ether, or a digital share certificate. You need digital wallets, exchanges, settlement systems, transfer agents, and so on and so on. And so the great thing is the companies we're backing are straddled. They win either way. And the whole world will go to digital monies and assets. This is an inevitability. It's just a question of timing.
And you've written extensively about what you term the fifth era. Can you explain to us what that is?
Yes, thanks for bringing that up, Jill. So the world is shifting to a new era that's very different from the industrial era, which was the fourth era that we've been through. And some of the hallmarks are going to be a complete digital economy in which 8 billion people not only speak to each other in real time and at essentially zero cost, but in fact, all commercial transactions will be on that same digital platform. Now, we're not there yet. The internet got us to a point where about 4 billion people are communicating online. So you've got half the world that isn't. But the communication platform we have is not fit for purpose for digital monies and digital assets, and we're upgrading it. So all these companies you're reading about, whether it be Coinbase or Kraken or Wire or SFox and Securitize, these companies are building the infrastructure for the fifth era digital economy that we're going to have. And hopefully the world's largest companies and banks and governments are going to get on board. They've been resisting a little bit for the last few years, but I think they're now on board.
So Matthew, it's so interesting when we look at these iterations of the different revolutions and so forth that we go through, whether you're looking industrial or technology age or where we are right now, it's the velocity of them that continues to be impressive. It's just the next phase is faster than the last. So for the Trade Talks audience, what's the best way for companies to prepare for the fifth era in this digital age?
Yes. So this is a bit of a cliche here in Silicon Valley, which is where I'm based. In fact, you've all heard it before. We tend to underestimate the power of technology over the long haul. It turns out to be much more impressive than we'd expected even though we may get ahead of our skis at the beginning. So that inflection point, which VCs mine very effectively, they want to get in just as the inflection point on companies and technologies is taking off. That inflection point is with us right now in this area of blockchain, distributed ledger, crypto monies, and so on. And the best way to prepare for that inflection point is don't hesitate, get involved now. And what's been happening, and it always does happen, it happened with electrical vehicles, which is the established players hesitated too long. In fact, they resisted. They wanted to live in the past and they didn't want to accept a future that was going to be different. And when the inflection point happened, it caught them out. And so Tesla became the world's most valuable car company, and they're now scrambling to launch their electrical vehicles, let alone their supercharger networks. Elon Musk has built a global supercharger network and no one else has one. So in the case of blockchain, the best way for your viewers to get started is to take a baby step and get started now. And it doesn't matter what the step is. It could just be open an account somewhere and buy $100 and just figure out what is real-time digital payments and transfers and purchasing and selling. What is it all about? And you'll come up the learning curve. And I think that corporate executives need to do the same. If you go to a very large bank and you ask the senior executive team, have any of you ever bought Bitcoin? The answer is most of them have not. And if they haven't, they don't understand the future of money. They don't understand the future of payments. They don't understand the future of real-time remittances, international as well as domestic. And if they don't understand any of that, how can they be the senior executives of a bank?
Interesting points, Matthew. We appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Great to be with you. Thank you.